Can Muslims invest in the stock market? Or is buying shares just another way of earning riba, wrapped in modern finance? Today, some scholars call stocks the backbone of modern wealth building, while others warn that careless investing can slip into haram territory faster than we realize. In this episode, let's explore the world of halal investing, from Sharia screening to halal indices, to whether short-term trading, dividends, and fintech apps fit into Islamic values. Foundations of stock ownership in Islam. At its core, a stock represents ownership in a company. When you buy one share of Apple, you literally own a small piece of Apple Incorporated. You're not lending money, but becoming a partner. This distinction is crucial in Islam. Why? Because Islam encourages partnership-based business while discouraging interest-based lending. The Prophet Muhammad approved of mudaraba, profit-sharing, and musharaka, joint ventures. In principle, buying stocks mirrors these concepts. You share both profit and loss. So, the act of owning shares is not inherently haram. The real question is, what kind of company are you owning? And how is it making its money? Halal versus haram companies. Not every stock is halal. Imagine buying shares of a company that makes alcohol, sells pork products, or runs casinos. These industries are explicitly prohibited in Islam. Scholars usually agree on four clear haram categories: alcohol and drugs, intoxicants, gambling and betting, conventional banks and insurance companies that profit from interest, adult entertainment, and unethical media. But things can get tricky. What about a tech giant like Google? Most of its business is halal, but it also earns interest income from cash reserves. Or airlines that serve alcohol on flights. Here, Islamic scholars apply Sharia screening filters to decide. Sharia screening ratios. To separate halal from haram, Islamic finance experts use screening criteria. The most common are: debt ratio. Companies' debt should not exceed 30 to 33% of its assets. Interest income. Revenue from interest should be less than 5% of total income. Liquidity ratio. A balance between liquid assets and fixed assets should exist. Business activity test. The majority of revenue must come from halal sources. For example, Tesla is often considered halal by Islamic indices, while JP Morgan is not, since it's primarily a bank. These filters are why many halal funds exist, to save individual investors the burden of analyzing every balance sheet. Halal indices and funds. Over the past 25 years, specialized indices and funds have emerged. These include Dow Jones Islamic Market Index, FTSE Sharia Index, MSCI Islamic Index. They track only Shariah-compliant companies worldwide. In addition, there are halal mutual funds and exchange-traded funds, ETFs, available in the US, UK, Malaysia, and the Gulf. This means Muslims can invest with more confidence, knowing professional Sharia boards have screened the stocks. When Muslims step into the stock market, the biggest challenge isn't just finding a profitable company, but making sure that companies' core activities align with Islamic principles. For example, investing in businesses that deal with alcohol, gambling, conventional banking, or interest-based insurance is not permissible. But the situation is rarely black and white. Many large corporations operate across multiple sectors. Imagine a tech company that makes most of its income from software, but also keeps its surplus cash in interest-bearing accounts. Does that make it completely haram? Or consider a logistics firm that rents part of its property to a conventional bank. These kinds of mixed revenue situations force Muslim investors to evaluate not only what a company sells, but also how it finances itself and where it earns its side income. Day trading, short selling, and options. Now comes a gray area. Many Muslims wonder, is day trading halal? Day trading, buying and selling stocks in minutes or hours, is seen by some scholars as speculation rather than true investment. Islam discourages excessive speculation, gharar, because it resembles gambling. Short selling is even more problematic. It involves borrowing shares you don't own, selling them, and hoping the price falls. Since you're selling something you don't possess, most scholars call it haram. Options and futures face similar criticism. They are contracts based on uncertainty and often involve interest. So, while long-term investing is encouraged, hyper-speculative trading is generally discouraged in Islamic finance. Halal investment strategies. For Muslims who want to build wealth, a few clear strategies stand out. 1. Buy and hold halal companies long-term. 2. Dividend investing, but dividends from haram activities must be purified by giving them to charity. 3. Use Islamic brokerage accounts offered by some platforms that avoid margin trading and interest. 4. Diversify into sukuk, Islamic bonds, gold, and real estate alongside stocks. This way, Muslims can balance growth, stability, and compliance with faith. This is why Islamic scholars and financial experts developed Shariah-compliant screening standards. These criteria don't only look at the type of business, but also check things like debt ratio, interest-based income, and even the percentage of non-compliant revenue. If the non-permissible income is below a certain threshold, investors may still hold the stock, but must perform what is called purification, donating the proportion of earnings that came from haram sources to charity, without expecting reward from it. This balancing act is what makes Islamic investing unique. It's not just about making money, but about constantly aligning financial choices with spiritual responsibility. Stocks versus other assets. Why focus on stocks at all? Let's compare. Gold, a timeless store of value, but it doesn't generate income. Silver, historically important, but less stable than gold. Oil, strategic, but volatile and tied to politics. Crypto, innovative, but highly debated in Islamic finance due to speculation. Real estate, tangible and halal, but less liquid and requires high capital. Stocks remain unique because they combine growth potential with ownership in productive assets. For centuries, Muslims invested in trade caravans and ships. Today, shares play the same role, funding enterprise and sharing profit. Contemporary issues, fintech and apps. In the age of fintech, Muslims can now download apps like What Invest, Zoya, or Islamically to screen stocks instantly. Robo-advisors even build Shariah-compliant portfolios automatically. But we must ask, does this convenience make us less cautious? Technology helps, but personal responsibility remains. A halal label on an app doesn't replace due diligence and Islamic awareness. So, can Muslims invest in the stock market? The answer is yes, with conditions. Stocks themselves are not haram, but careless investing can make them so. By avoiding prohibited industries, applying Sharia screening ratios, and steering clear of speculative trading, Muslims can build wealth in a way that aligns with faith. Investing is not just about money, it's about values. For centuries, Islam has taught that wealth is a trust from Allah, and we will be asked how we earned it. So, the next time you buy a stock, remember, you are not just an investor, you are a partner in that business. To get more compact insights about Islamic finance, don't forget to subscribe and like to Islamic Finance Unboxed channel.